So everyone, good afternoon. Can you hear me? Hello, naririnig niyo po ba ako? O- okay, okay. So, the topic that I'm going to report is the of types of bonds. But before we proceed to types of bonds, let us first identify short viewpoint for us to understand better what actually a bond is. So what actually a bond? Bonds are, next, loans are given for companies and governments by investors to raise money as their capital for providing goods and services. Stocks and bonds are both traded in markets. And another one is that buying a bond is an indirect way of lending a money to an enterprise. Therefore, there will be no part ownership that takes place in bonds unlike in stocks. So, why does bonds are used by a company for raising money as their capital? The reason behind this is because bonds have lower interest rates compared to business loans that are issued directly from banks. So, for example, si Jollibee Foods Corporation, it needs to have a capital of 1 billion peso. But, kapag nanghiram siya ng pera sa business loans, for example, the interest is just 1%. Um, um, Prefer niya pa rin na mag-loan through bonds because that 1% of 1 billion peso is still higher. Because 1% of 1 billion pesos is still 10 million pesos. That's why most investors choose bonds rather than business loans. Okay? Next slide. So, coupon bonds. Coupon bonds is basically detachable coupons sent by the investors obliging an enterprise to provide interest payments which will be given to the bondholders. Okay? So, for the coupon bonds, this just like a ticket getaway for the issuers of the bond to pay their amount of obligation to their bondholders. Ito yung nagbibigay sa kanila ng reminder na bayaran nila yung yung bondholders nila whether or not na nag-gain sila ng profit, okay? So next slide please. Next po. So dun po sa bonds, there are advantages and disadvantages. The first advantage is that the face value with the promised payment interest will be given to investors in exchange of using their money by regular scheduled payments. So, the so-called scheduled payments, actually, these are done, scheduled payments that are done in a number of years. They're also called as tenor. Okay, so for example, if a company made bigger investment, a higher interest rate of return will be repaid by the company on a scheduled date. And also, if there's a guarantee that bondholders must be paid first by the company before any profits are distributed to the shareholders. So, dito sa bonds, ang kinaganda nito is, bago magkaroon ng profit itong, the moment of point na nagkaroon ng profit yung isang company, ang una muna nilang unahin is yung bondholders before shareholders. So, guarantee talaga na may matatanggap ka rito. So, another advantage is that it's the best alternative for stock and only has low to moderate risk because of its stability. It doesn't fluctuate compared to stocks. So, bonds, in other words, this is actually riskier than stocks, okay? Because investors actually use bonds to diversify their portfolio or for expanding their list of financial assets. So, another disadvantage is that bondholders have no liabilities, just like in stocks then, to company just in case it went bankrupt. So kapag nalugi yung company, wala silang liability doon because there's no such thing as part ownership in bonds. Okay? The next one advantage is that it is actually a fixed income. So why does it called as fixed income? Why does it identify as fixed income? Simply because this is called as fixed income because, for example, you are a stockholder, but if you are unable to sell your stocks, you will get nothing in return, 'di ba? Unlike in bonds, payments are made periodically, whether or not the company has gained its plausible profit. So, kung may advantages, there are also disadvantages. The first one is actually the default risk, wherein the issuer is unable uh, to pay back if the business went bankrupt. Another interest risk, another disadvantage is the interest risk. As the interest rate goes up, any bonds owned will be worth less if sold before the maturity date. Okay, next slide please. So another one is the bond rating. It is actually an indicator and it gives the investor the idea for measuring risk by comparison of ratings. It is actually rated by S&P, or simply known as stock market index. So as you can see in the table, there is actually investment grades by the S&P, and these are graded by high, medium to lower quality. So uh, for the high risk of types of businesses, they're labeled in the S&P by the triple A down to double A minus. So for medium risk, for example, Starbucks, it has a S&P grade of A minus that comes from A positive to A minus. While for the lower ones is that triple B positive until triple B negative. So anything lower than triple B, they are already considered as junk bonds. Okay, so okay. Okay, next slide please. Another explanation for the S&P ratings, or for the risk of risk indicator for bonds. Anything lower than triple B would be junk bonds. But the con is that bond rating isn't always accurate, so further research is needed. So when it comes to bonds, it matters actually who is issuing the bond. The highest rating scale in a bond would be riskier, but will bring better interest in return. And also, higher interest rates depend on the financial stability of a company, and they're usually well known. Yeah, for example, Jollibee, KFC, so on and so forth. So these companies are giving higher coupon rate because they're more likely to go bankrupt. For example, is the corporate bonds. Okay? So we're going to discuss now the types of bonds. So there are actually common types of bonds, and there are actually a lot of types of bonds. But I included only here are the common bonds that are familiar to investors, okay? So there is the common type and the other type. So let us first discuss the common types of bonds. First one is the government bond. Government bond is also known as retail treasury bonds. It is issued by the government for them to accumulate funds necessary for their planned projects and services. So, for example, if there is no issuance by the government, or this issuance by the government is not available in banks, therefore, it will be passed to secondary or just the common market. Okay? So, dito sa government bond, ang kinagandahan dito is that the face value just starts at 5,000 pesos, I think. But closer to that, okay? So, opo, 5,000 po, sir. So, ginagamit nila to, of course, to finance their projects, their construction, you know. Okay, the second part is the corporate bonds. Okay, corporate bond. This can be called as long-term commercial papers. It is issued by commercial enterprises to expand their business or to raise capital to start up a business. So the duration is subdivided into short term, mostly 5 years. Intermediate term ranges from 5 to 12 years, while the long term is more than 12 years. So when it comes to corporate bonds, um, corporate bonds has higher returns since they are riskier than government bonds. So, yun nga, may iba't ibang duration ang corporate bonds. So, in my opinion, or in any investor's opinion, the shorter bonds are better investment than longer bonds because a higher interest rate is expected to accumulate. So, the potential of growing your money is greater compared to the larger ones. Okay? Next one is the collateral trust bonds. It is issued by security firms and has a higher face value needed to become a bondholder since this type is more secured compared to others. So, as far as I know, collateral bonds usually have at least 100,000 as face value. Okay, next slide please. Next slide po. Okay. For the foreign bond. Foreign bond is traded in foreign market and is controlled by a foreign current. Its purpose is to gain interest in foreign currencies. So, foreign bonds actually are unstable and actually it is riskier than foreign exchange rates because of how risky the currency will be. So for example, 1 Japanese yen is equivalent to 0.0093 US dollar. So meaning the person should have paid 0.0093 per bond. Another common type is that the mortgage bond. Holders can claim on the real estate assets as collateral. So when it comes to mortgage bond, it's easier to buy a loan. When it comes loaning a house in banks than going on to vacation, since the house will serve as collateral by banks. Just in case, the owner of that house withdraws withdraws to sustain their payment. Therefore, the bank will get that house, and then, in other words, the bondholders could sell off that property to compensate for its default. Okay, another one is the convertible bond. This enables an investor to transform a bond into stock. So, simple meaning, it's just a transformation of bonds to stocks. So the last common type is the income bond. The issuing company only pays coupon payment if only it has sufficient income. Otherwise, only the face value of the bond is expected to be paid alone. It is also referred as zero interest rate bond. Okay. Next slide po. Next po. Hello? Next po. Sorry. Hindi ko kasi nakita. Okay. Okay, so there are actually other types of bonds. The first one is the floating rates bonds. Interest fluctuates with respect to the current market. While the second type is the interest rate of inflation bond. It provides lower inflation interest rate compared to fixed rate bonds. So another type is the perpetual bonds. Okay, perpetual bonds, the interests are enjoyed by the holders all around. No maturity date exists. Perpetual bonds are attractive sources of capital for the issuers or investors. However, the only consequence it has is that the issuer have to pay the coupon for an eternity of time. Okay. So, the fourth one is the serial bond. Serial bonds have matured interest and are paid by installment over a division of time. The fifth is the bearer bonds. So, anybody who carries the bond certificate can claim the amount. In other words, it does not carry the name of the bondholder. So, this kind of bond is actually very unusual compared to other bonds because there's no registered or no records to be kept by the owner. Meaning there are no transactions recorded that involves ownership unless you have the bond certificate to claim the amount. So, ang importante lang talaga dito is yung bond certificate for you to get the amount, okay? So, the next one is the climate bonds. It is issued by the government to provide funds after a country experiences calamity. While the last one is the government's way of raising funds in the possible event of war, and that is the war bonds. Okay, I'm done now. Okay, thank you so much for listening.